What's up, guys? How's it going? You like my new pop socket? Anyways, how's it going, guys? Welcome back. It is Monday. Check it out, my mouse is matching my screensaver right now. That's pretty cool. Dude, I freaking love this mouse, by the way. Like, seriously, honestly, I put a link in my description. It's an affiliate link. I'll be upfront about it, but legit, that's like my favorite mouse I've ever used. I'm getting into the whole macro thing where you can program your mouse to just do a bunch of stuff with a press of a button, and I am loving it. It's helping with editing. If you're someone who writes a lot of emails and you find yourself typing a lot of the same phrases, to get and look into macros, it's just like a life changer. Anyways, we got crushed today. Welcome back, by the way. Today's Monday. But yeah, we got crushed, and we're gonna talk about that. I did a live stream today, so thank you guys so much for joining the live stream. For those of you who joined, today is December 4th. So for those of you who joined that live stream, thank you guys so much. We're gonna look at how we did before the things refreshes, and then we'll talk about a couple things. And then I'll kind of give my thoughts about today as a whole and where the market is right now. So I'm gonna log in, and then we'll see how we did. We got kind of owned again. We're at 163. I believe we're at 170 something. Like, we lost a lot today. So let's just see. Let's just look at the dollar amount so we can actually see. Oh, it's already on the dollar amount. All right, so we lost 12 grand. Not as bad as last Wednesday, but still not good. However, with as bad of a sell-off as there was, I'm actually glad that it wasn't more than that. Like, I think it could have been a lot worse. And we did have some Dow components that saved our butt today. Like, check it out. We had Home Depot. Totally kind of saving our butt today. Because if I had not, like, just imagine that HD option was like an NVIDIA or Universal Display. This today would have been way worse. Like, I would have lost probably another 4 grand on top of that. It would have been really, really bad. So I'm really glad that I diversified and got into some more non-tech stocks like Home Depot. They're just a solid company, and they're not going anywhere. People are always going to need what they sell, and so they're a solid pick. If you're looking for something that's not a tech stock, I would definitely recommend Home Depot. And then we got JP Morgan, Citigroup. So again, 2 banking stocks. Then we got Best Buy, who I bought because I just think they're going to have really good holiday sales. And I think they're kind of stepping their game up in general. And yeah, and then we got the blockchain one that went up. So we had, there was some positives to this. And then we had our Abercrombie put went up, and then one of the Apple calls went up. But then we have the ones that did bad. So let's look at those. We had 28 decline in Adobe. They got hit pretty bad. EA Sports got hit pretty bad. Lam Research got hit pretty bad. We're going to talk about them in a little bit. And then Universal Display, NVIDIA, and then Amazon. So yeah, overall not great, but let's look at the watch list here. Okay, so there's that the freaking Bitcoin one, dude. So mad about Bitcoin, and like I should just take that off my freaking watch list. I get pissed every time because it's like always at the top of the list. It's just ridiculous. Anyway, here's the second page. Then we got the ones that went down. Tesla actually fared pretty well today. They're still above, they're kicking, dude. They're kicking above 300. They are not giving up, just like Elon Musk. Dude does not give up. I love that guy, seriously. I'm already in chapter 5 of that book that I talked about that I got last week. I just can't put it down. It's been kind of hard for me to put it down, which I don't normally say about books because I usually hate reading. But anyways, all right, so there is that. Okay, so let's talk. All right, so with Apple, so again, today was just like, it was just the tax stuff. Let's talk about the tax bill. It was passed this weekend through the Senate, and by the time you're seeing this, maybe it'll already be passed by now. Who knows? I'm not sure. I think it will be, but I was watching on the news today. They were showing like all the sectors that will benefit or that pay the lowest tax rates already before this tax bill, and technology was the sector that paid the lowest effective tax rate, which was 24%. And so they're saying they're gonna benefit the least from this new tax plan, which kind of sucks because I own mostly tech, and I was hoping that they would benefit a lot from the tax plan. But I do think some companies like Apple, who has a lot of money offshore, I think will benefit, because I think Trump's going to help them bring money back cheaply, and I think they'll still benefit. I think companies as a whole will still benefit if it gets passed, but I know there's a lot of people who don't want it passed because there is a lot of shitty things in there for like individual people. Like, yeah, so I'm conflicted because part of me wants it to pass because I think I'll make money in the stock market, but I don't want it to pass because I know a lot of people who will be hurt by it. and probably including me too. So like, I don't know. So anyways, let's just keep going. So Apple, this article headline, just agreed to give almost 6% of its cash pile to Ireland, which right now, which they have like $261.5 billion overseas, like in Ireland, and their island companies or whatever. And the EU voted that it was illegal what they were doing, and Tim Cook and the Ireland government are appealing it. Tim Cook said it was total political crap, but so what happened was, since the early 90s, Apple had an agreement with the Irish government to pay as little as 0.005% taxes on the money they had there, and they did that to kind of spur some investments in that company and stuff like that. And just put that in perspective, that's such a small percent, but it's still, based on $261 billion, 0.005% of that is $13 million, which is still a lot of money, but compared to $261 billion, it's not that much. So anyway, the EU wants them to pay $15.46 billion to the Irish government, so I feel like the Irish government is still coming out ahead either way. But, Ireland wants to keep that relationship with Apple, so they're going to protest it or appeal it. But anyways, that's what's going on right now. Apple, the money's in escrow right now until they figure out what happens, but moving on, there's a Zacks article from Zacks.com, which I'm sure a lot of you guys heard of. This article is titled "Tech Stocks to Buy Amid the Industry Sell-Off." Once again, I want to reiterate the point that a lot of people are thinking that tech is like overpriced, it's in a bubble, but it's really not, because if you look at the PE ratio, and I'm actually starting to get a better appreciation of this ratio. I've pretty much ignored it my entire investment career, but I'm starting to appreciate it more now, because in the 1999, like the late 90s, when the dot-com bubble was about to burst, the overall tech as a whole were averaging PE ratios of like over 100, like 90 to 100, like really, really high. And for a quick explanation of PE ratio, it's a fraction, right? And I'm a math guy, so I like fractions. So with a fraction, you got the numerator, denominator. The bigger the numerator is, the bigger the overall number is. So like if you have, for example, 10 over 2, that's 5. 20 over 2 is 10. So 50 over 2 is 25. 100 over 2 is 50. So the bigger that numerator gets, the bigger your number. So with a price-earnings ratio, it's a fraction with price of the stock, earnings of the company. This is how I'm understanding it. Correct me if I'm wrong, but this is how I'm understanding it. So when the P is really high, so like the price is really high over a low earnings number, it's a high multiple, which people equate with an expensive price for the stock. So if like, okay, this company has a PE ratio of like 50 or 100 or whatever, it's really high, that means that they think it's overpriced. If it's low, like 20, 30 or lower, they think it's a cheap stock. And I'm finally getting an appreciation. I kind of been ignoring that, like studying upon that, because I don't want to fill my head with too much, knowledge that I think it might hinder my decision making. But I think I'm appreciating this more now that it'll help me as an investor. And it's helping me right now because if you looked at the dot-com bubble, they're like in the hundreds. Right now, the tech sector and the tech-related companies, on average, their PE ratio right now is like around 24.13, according to Zacks research. And I think that's very much different than the dot-com. So they're saying, and so the reason that number is lower is because you have a higher earnings, which when the denominator gets bigger, the number shrinks as a whole. So if you have like 5/10, that's a half. 5/100 is a really small number. That's 1/20. So the bigger your denominator, the smaller your number. So when earnings are big and companies right now are reporting stellar earnings, the PE ratio gets smaller, which means stocks are more affordably priced. So they're more attractively priced. And so right now, as it's standing, the PE ratio is pretty good. And so that's why I'm pretty confident the stocks are going to come back up, and I'm not freaking out despite losing a lot of money. Anyways, I'm rambling. But I hope you guys learned a little bit more about the PE ratio from that explanation. And so their top 3 stocks that they're recommending, luckily the ones that we all own right now, Lam Research, they said they have very affordably priced right now. They got hit hard with the sell-off, but they think they're due for a lot of growth. Activision Blizzard was the second one, again, one that we got, so I'm really excited about that. And then 3 was NVIDIA. So all 3 of those that they said, the 3 tech stocks to buy, those 3 were on the list, and I'm glad that we already own them, and it makes me more confident that I'm holding on to them. So yeah, so I think we're gonna leave it at that, but if you have any comments, please comment in the comment section below. Do you agree that this is just kind of like a sell-off and they're gonna come back, or do you think tech is kind of doomed right now? Please comment in the comment section below. Love your feedback, and thank you guys so much for tuning in to the live stream. Really love talking to you guys. I think it was like the most people we've had today, so really excited. And if you guys like this video, please hit that like button and subscribe if you haven't already, and all that stuff. Hope you guys have a fantastic night, and we will see you guys tomorrow, and hopefully we won't be broke by then. So, all right, good night, guys.